Very good morning. Very good morning, everyone. Sorry for the delay. There was a technical issue, so it took time in fixing it. That's why the class got delayed. Okay. So, welcome back again in this editorial analysis series. So, we are here with editorials of yesterday as well as today. So, class didn't happen on the day before yesterday because there was no relevant article. So I didn't find anything to discuss with you which was there. I went through all the newspapers, so that's why I didn't take the class. All right. Now I have gone through all the newspapers of yesterday as well as today. So there are two articles here which we have for today's discussion. Okay. So let's begin. First is your less taxing. Let me tell you one thing, that since budget is expected to be there, to be announced in to be presented in July, so these editorials are much of prospective nature, that what the government should aim at, what reforms the government should aim now, right? So all these things are there. That's why scrutinizing the editorials which are more relevant for us takes time. So I have selected two editorials. Much of them are repeated ones. So there is one in, I think, Economic Times. It talks about the investment-led growth. So we have already discussed the investment-led growth, right? So I'm not taking up those articles which we have discussed already. Okay, so today the first editorial which we have, combining the newspapers of yesterday as well as today, is your less taxation. This is from yesterday's Indian Express. You can read the editorial. Okay, so this one is from yesterday's Indian Express. Now what does this article talks about? It is basically giving you an idea of how India's taxation should be. What are we expecting before the budget? What tax reforms are we expecting? Okay, so I have picked up this article because I will discuss some important concepts related to taxation with you. So your taxation concepts will get stronger via this editorial. Okay, let's see. So here the title which I gave to this slide, as you can see, is Canons of Taxation. Canons of taxation. What are canons? Canons basically are, virtue. Virtue. What is a virtue? Virtue is something which is good. So canons of taxation are good properties which a taxation system of a country should have. So let's discuss what the author has to say regarding this. Okay. Now, so the author in the editorial says that with all eye on the government to cut the rates to boost the demand, there is a need for comprehensive tax reforms. Now, this editorial says that we need a comprehensive tax reform. What kind of tax reform? It is not like we need to implement something like GST on a bigger level. No, we need to reform what is existing already, what is there existing in the taxation system. Okay, so here the first thing highlighted says that government is expected to cut the rates and boost demand. Now, what is the relation between cutting the rates and boosting the demand? You all know, when I say fiscal policy, or when we talk about the fiscal policy, okay, first let me know, is the audio video clear to you all? I didn't ask today, right? So I just kept on discussing the analysis. Is everything good? All right, thank you. Okay, otherwise I had to repeat everything. Okay, all right, good. Now, so when I say fiscal policy, you all know there are two tools lying with the government regarding fiscal policy, right? Capital G and capital T. Capital G stands for entire expenditure incurred by the government, and capital T stands for your taxes. Now, government uses these two tools to affect the level of demand in the economy, right? Or to say aggregate demand in the economy. Now, when we expect that government needs to boost the demand, why are we focusing, why the author is focusing on boosting the demand? Why is everyone expecting cutting the tax rates in the upcoming budget to boost the demand? It is very interesting. If you could, I would appreciate if you could relate this to your RBI report analysis. Can you tell me the relation behind this expectation? Or one of the editorials which we have done, that presently India's demand has become more of investment led as compared to the consumption led demand which we had earlier. Are you able to recall that analysis? Yes or no, right? We have discussed. So we cannot afford decoupling of consumption with growth. Yes. So also looking at the looking backwards at the trend, you see we have discussed that India's GDP is now decoupling with the consumption and now more aligning along with the investment. So it is more of investment led growth. That is good. That is good, but you cannot compromise on the demand side as well, because demand is the driver of economic growth. If you leave the demand unchanged, if you leave the demand on its own, if it falls, you can enter into a phase of recession in the business cycle, isn't it? Also, given the fact, if you are able to recall the previous editorial analysis, that demand is important given India is in the phase of demographic dividend, where we have the highest population in the working age group, isn't it? You remember or not, right? So in that case, you have to boost up demand. Now, how are we looking at the government to boost up this demand? What the government can do with the tools available with the government is, yes, very good. You remember the concept of marginal propensity to consume and save, right? All these concepts we have discussed in the classes. So either, now to boost demand, either government can increase its expenditure or it can reduce its taxes, isn't it? So this kind of combination of fiscal policy is needed. So G is an important factor which affects the aggregate demand level of the economy. If you see this equation, if I say aggregate demand in the economy is equals to C plus I plus G plus net exports, or X minus M. That would be more helpful for you to understand. So C is all your consumption expenditure by the private sector. By private, I mean and apart from the public, which is government, right? So entire consumption expenditure, entire investment expenditure by the private sphere, entire expenditure on part of the government, which includes consumption as well as expenditure, investment expenditure, and entire net exports. Net exports means net income from your exports, say exports minus imports, what you have earned minus what you have paid. So all these affect the aggregate demand. Now tell me, this is a clear-cut equation which you have. If G increases, will aggregate demand will rise or not? Yes or no? If G increases, aggregate demand would increase or not? Yes, that is clearly visible from the equation, right? So either government can increase G. Now this is what government does during recessionary cycles. If you remember, after Corona period, or the Indian economy faced a downward trend on the aggregate demand, right? Now to deal with such situation, what government does is, government tries to purchasing goods for infrastructure, for ministries, departments, that induces demand in the economy for those goods. Once demand starts picking up, the production in those categories would increase. Once production picks up, employment would increase. Once employment picks up, people have income, they will be earning. Once they start earning, they will demand more, and the cycle continues. It will go on and on and on, right? So this is how it helps in reviving the aggregate demand and reviving the economy. The another thing which we need to discuss is taxes. Now taxes are something, tax administration needs to be efficient. So either you can increase your G or you can reduce your T. If you reduce your T, that is tax rate, that gives people a more amount of disposable income, isn't it? So when tax rate falls, disposable income increases. What is disposable income? Personal income minus taxes. Okay. What is disposable income? So your disposable income, which you can dispose at your own will, now you don't have any liability to pay out of it. Okay, so disposable income is your total income, or say personal income minus taxes. Personal income minus taxes. So once your disposable income increases, you start demanding more. So it adds to your aggregate demand. It adds to your aggregate demand, right? That is what the analysis is trying to say, that we are looking at the government to boost the demand via cutting the rates. Now I hope you understand why cutting tax rates can boost the demand, isn't it? Right? There is a need for comprehensive tax reforms. So the author says that we need comprehensive tax reforms. What are these? There are certain, although tax reforms, can be a huge chapter, can be a huge topic to debate upon or to discuss. But I will try to highlight some important points which you should remember, which should be there in a country's tax administration. Also, particularly talking about a country, an economy like India, okay, which has certain inherent history of taxation. We have certain challenges as well. So we have to find out a balance while also aiming for tax reforms. Let's see. So lowering the tax rates for the low income groups and widening the tax base would help. This is what the author suggests. Now I want you to focus upon this thing, lowering the tax rate and widening the tax base. There's a difference between tax rate and tax base. What is a tax base? What is a tax base? Anyone? So tax base is, the criteria, the criteria of on which the tax is imposed. Suppose population, suppose income. So tax base for income tax would be the income, the people whose income you are going to tax. Right? So you need to widen the tax base, the base on which you are charging the tax, and cut down the tax rates. Are you getting my point? That would be more rational in case of India. Here, before moving ahead with the analysis, I would want to discuss one concept of Laffer curve with you. You can draw that curve. It would help you in your descriptive as well. So let's see. This is not what I am saying. This is said by Arthur Laffer, a famous economist. Okay. So he says that there is this Laffer curve. Here on the y-axis we have tax revenue. Here we have tax rates. You can draw this curve. So here we have tax revenue, here we have tax rates. Okay. Now this goes like this. Okay. This would be maximum. Maximum. Now this is a Laffer curve. Laffer curve. What is this? So as you can see, this curve shows that as tax rate increases, initially you will be able to generate more revenue. You will be able to generate more tax revenue. See this rising trend. But a point will come that would differ economy to economy, right? A point will come that your revenue collection with rising tax rates would be maximum, and after that, if you continue with the rising tax rates, actually your tax revenue collection would start falling. So this maximum rate, suppose 20%, for example, just for example, suppose 20%, can be different for every economy. How much higher tax rate are you able to absorb? That differs economy to economy. Are you able to understand? So here is your tax rate. So say from 0 to 20, you see the tax rate up to 20%, for example, in case of India, can be absorbed. Okay. So in that case, government will see rise in tax revenue collection. But if the government continues with the higher tax rates, the tax revenue collection would actually start falling down. This is what the Laffer curve also says. So it was given by Arthur Laffer. Have you understood this point? Yes or no? Have you understood this graph? So you should remember that in order to increase the tax revenue collection, one cannot go with higher tax rates for a longer period of time. Otherwise, eventually the revenue collection with higher tax rates would start falling down. Are you able to understand this? Yes or no? Have you understood the Laffer curve? Let me know. Yes? Okay. So now remember this in our further analysis. Okay? Remember, you can draw this as well, or you can take a screenshot. Okay? Now, so coming back to the analysis, here you see lowering the tax rates for the low income group and widening the tax base would help. Now we are getting this point why the author is suggesting that we should lower the tax rate and widen the tax base. Here comes a difference which I need to discuss with you between developing and developed economies. If we see one of the fastest developing economy like India, you cannot afford to have higher tax rates. Either you talk about direct tax or you talk about indirect taxes. More particularly, you cannot go with higher tax rates in indirect taxation. Can you let me know why? Because indirect taxes are what? The prices which we pay for consuming goods and services, isn't it? Right? So, if in a country like India where poverty still remains an issue, poverty still remains a challenge, food insecurity still remains a challenge, you cannot go with higher indirect tax rates because it would directly affect the pocket of the common man, isn't it? Are you able to connect the dots? Rise in indirect tax rates would directly affect the pocket of the common man. That cannot be afforded in case of India. Right? So you see, there is a difference between tax structures. We are trying to understand these conceptual differences, fundamental differences. So now I would ask you one question from my side to all of you. Tell me, for a developing economy, raising the tax rate of which tax would be more efficient, the direct tax or the indirect tax? And for developed economy, which one could be more efficient, indirect tax or the direct tax? Let me know. Can a developing economy like India increase indirect tax rates to a greater extent? Yes or no? Okay, let me know in case of India only, if you have understood this concept. So, you are saying no, we cannot go with the rise in indirect tax rates for India. Okay, further answers? I am waiting for all your responses. No, right? No, very good. So, majority of you are saying, not majority, just got 3 answers, but whatever I got, you are saying that no, okay, we cannot have indirect tax rates way higher. Why? It is going to attack the common man's pocket, isn't it? But then what about the direct tax? Even if you rate the direct tax rate, that is going to leave people with less disposable income. So that is also going to affect the purchasing power capacity. What to do now? So we have to find a way in between, right? So here comes this concept, that India needs to widen the tax base. More people, more income groups can be taxed, but at a lower tax rate. Right? So it is like this, that charging fewer people with higher tax rate can lead to tax evasion, tax avoidance, lesser revenue generation. As compared to it, you can have, say, if your tax base is this much only, I'm just drawing it to make you understand, right? Suppose this is your tax base. It is case A, and you have higher tax rates, higher rates of taxation. Okay, tax base is this much only. Situation B is you have this much tax base, this much income, this much population, whatever the base is. On whatever thing you are calculating, the tax rate is your tax base, right? So if tax base is broader with say lesser tax rates, which situation is better, A or B? A or B? Tell me. Which situation is better, A or B? B. B. Okay. Very good, very good. So, of course, this is better, right? Because even if some people do not comply with the tax norms, you will still be able to generate revenue. Also, you can substantiate your point with the Laffer curve theory which I gave you. Not I gave you, which I discussed with you, right? It was given by Arthur Laffer. So, we have discussed the Laffer curve as well. It also says that with reduced rate, you can increase your revenue generation. So, this is the thing which I want you to remember, particularly in case of India, we have a narrow tax base, particularly in case of direct taxes. Now, why cannot we have a very narrow tax base in indirect taxes? This is very commonsensical, because you cannot, prevent yourself from indirect taxes. If I ask you, are you all taxpayers? What would your answer be? If I ask you, are you all taxpayers? What would your answer be? Are all of you taxpayers? Yes or no? No. You all are not taxpayers? No. See. Yes, very good. At least some people understood my question. I didn't ask you, are you all income taxpayers or not? Okay. Yes, very good, very good. Exactly. Everyone, who is purchasing something on this earth is an indirect taxpayer. We all are taxpayers. My question was, are you all taxpayers? I didn't ask, are you all income taxpayers, right? So, we all are taxpayers. We all are paying indirect taxes, if not the income tax. So, that's how the tax base for indirect taxes is already broader. That is not a concern. The concern is tax base in case of direct taxes. That's what I wanted you to understand. Okay. So, remember these glitches in taxation. You should focus upon widening the direct tax base and reducing the tax rates. According to Laffer curve, you will be able to generate more revenue. And in case of India, you cannot go with higher indirect tax rates, as is the case with some of the advanced economies. If you see some of the developed economies, some of the Scandinavian countries, you have higher indirect tax rates, but they can sustain because the poverty is not an issue there. They can afford it, but India cannot sustain. So these are certain case studies which you should remember in the back of your mind. Okay. I hope you have understood what I wanted to convey to you, right? Now moving further, that's why the author suggests that, tax rates should be reduced and tax base should be widened. In this series, examining the capital gains tax would be beneficial. Now, for this, author says that we want the government to examine the capital gains tax once again. Why? This is a suggestion by author. Why the author is focusing on capital gains tax? First of all, what is capital gains tax? So, when you have your financial assets, you sell the asset, what profit you realize on the selling, what gain you realize on the selling of that asset is taxed. That is your capital gains tax, right? Suppose you purchase the capital for 500 rupees or the asset for 500 rupees, but now you sold it at 1000 rupees. So, you sold it with a profit of 500 rupees, isn't it? So that profit on selling the asset, that 500 rupees will be taxed. That is your capital gains tax. Have you understood it? That is your capital gains tax. Okay. Now, why the author is saying that government of India needs to relook at the capital gains tax? Because there are, varied structures. So, say for short-term capital gains tax for your equity, okay, equity funds is around 15%. Long-term for the same funds, 10%. For other kind of properties like gold, etc., I think it is 20%, okay, with indexation, with the indexed value or the adjusted value of inflation. So, it makes it difficult to grasp all these things. Now, what did the title, what title I put in the first slide in this editorial was Canons of Taxation. Here, I would want to discuss that title with you, that there are certain canons of taxation which you should remember, like canon of ease. These are certain virtues which should be there in tax administration of any country, like ease. So, complying with the tax norms, understanding the tax laws should be easier. Canon of economy. The cost which you incur on collecting the taxation should be less than what you collect actually via taxation. Yeah, so there are certain virtues which should be there. One of them is canon of ease, as we say. So, we call it canon of ease. Canon of ease. That the process of understanding the tax structure, process of complying with the tax norms should be easier for the public. That's why, yes, capital gains tax is difficult to understand. Varied rates among varied classified assets. Right? So, that's why you remember this. This is one of the canons of taxation which should be there in the tax administration of any economy. Canon of ease. It should be easier to comply with. I hope you have understood, right? So, this is what the author says, capital gains tax should be relooked upon. Understood? Why? Okay. Now, moving ahead. Then the author says, re-examining the capital gains tax is something which will help. Another thing which is the suggestion which we expect from the government to do is rationalization of GST rates. Of course, there are one nation, one tax, one market is actually not there. We have different tax slabs. So, combining the tax slabs according to author, I am not saying that, okay, according to the author, combining certain slabs, including more products into GST purview like petroleum, which now has been kept outside of the GST regime, would help. So, in the recent meeting, as you know, 45th meeting was held of the GST Council. The council has decided to form a committee of ministers to relook upon these structures. So, we are also expecting from the government that government should relook at the GST rate structure, GST rate slabs for that matter, to rationalize the taxation again, to have more canon of ease. Canon of ease, as I told you, one of the canons, this is the terminology which is used in the taxation, canon of ease, okay. Remember, canon of ease. So, rationalization of GST rates is also what is expected from the coming budget, okay. As you see, in the 45th meeting, GST Council had decided to form a group of ministers to look into this issue. Also, one possible solution could be merging of some tax slabs and might be introducing some other tax rate slabs under GST other than which are there at present, right? So, this is what is suggested by the author. Also, bringing items such as petroleum products into ambit of GST. As of now, you all know that petroleum products are outside the purview of GST. Yes or no? Yes. right? It is up to the GST Council's decision whether they want to include it or not. But then you have to take states in India into your favor. That would require a huge process, right? So the author is saying we can consider including petroleum products in the GST regime, not increasing the tax rates on the clothes, on the foods, packet items, all these things. That can also help government generate revenue as well as reducing the burden of tax on the people. What do you think so? Is it good idea? Is it a good idea or not? What is your opinion? Yes? Anyone? What do you think so? Alcohol should also be included. They tax more than 35-40% on petrol. They'll never put it under. Yeah, that is difficult. That's what I said. Petrol is very difficult to be included in GST. But still, this is what it was suggested by the author, right? Okay. Let's see what happens. We cannot say. Okay. Now, over the years, government has taken steps to increase tax base, reduce tax burden, and ease compliance. This should continue. This should continue. So, what is the solution for tax administration in India? Now you know very better. Not increasing the tax rates, but increasing the tax base. Okay. So, for India, if you are asked in interview or in descriptive or any other stage that India should focus upon increase in tax rates or increase in tax base, your answer would be increasing the tax base, because India cannot afford to have higher tax rates given lower per capita income, much poverty, much unemployment and other inherent challenges. Yeah, that is something which we celebrate because it also translates as expenditure for us. Sadat Ali. We do not celebrate our common people being taxed so much by the government. We celebrate government having sufficient sources to fund projects for us. Are you getting my point? Okay. There's a difference in that. Government should have resources to make plans, to give subsidies, to have schemes for the downtrodden strata. How would that be financed? It comes from the tax revenue only, isn't it? That is what is celebrated, not the higher tax rates. Okay. Understood? So I hope you have understood all these things. Now, for country like India, broader tax base along with reduced tax rates can increase overall tax revenue collection for Government of India. This is what the author is saying, right? So, this was all about this editorial. Another we have in this series, which is taken from today's Business Standard. Before moving on to the next editorial, let me know, have you understood this thing, right? Have you understood the concept of Laffer curve, tax base, tax rates? What suits for India? So, broadly we can say, given inherent challenges in Indian economy, our suggestion, my suggestion, your suggestion to the government or for the policy making would be, rather than increasing the tax rate, one should focus on increasing the tax base. That is what you learn from today's analysis. This is the mantra for India's tax reforms. Agree or not? Tax base is the base which is charged the tax, So, if your income is charged, income becomes the base on which the tax is calculated. So, if say income is the basis for calculation of tax, income tax, that is the tax base. Profit is the basis of, that is the tax base. So more incomes should be targeted. That means more people having taxable income should be targeted rather than increasing the tax rates on limited number of people. Have you understood now what is tax base? Why tax revenue decreases after reaching maximum? Okay. I think expanding tax rate would also help eliminating problem of freebies. Yes. Larger tax base instead of increasing tax rate. Yes. Now, yes, good question. Why after a certain point of time we see a decline in tax revenue collection? Because when tax rates are higher, this is a legal obligation. You have to abide by it, but you don't have income. That's what I said, that maximum would depend economy to economy. If there is economy having higher per capita income, that maximum could be more than 20%. For India, it can be less than 20%. Because with that limit being reached, people will start, tax evasion. Tax की चोरी करना start कर देंगे लोग. Tax बताएंगे ही नहीं, okay? Income नहीं reveal करेंगे. All these reasons, because now they cannot cope up with the higher tax rates. That's how you will see people will start concealing their taxable income, not revealing the taxable income, not complying with the tax norms. Eventually, your tax revenue collection will fall. Understood? Expanding the tax base, as I told you, very simple. Very simple. Just try to understand this, that if I were to charge some penalty from some say people, okay, if government has to charge some penalty, some tax from some people, if government charges the penalty, the tax, the fees from only 10 people, but with higher rate, higher chances are there that they will try to run away from this situation. They will try to find out certain loopholes to prevent themselves from paying this. So say if 8 people default out of 10 on paying the taxes, government's tax revenue collection would be affected. Now say if 1,000 people are taxed, now among 1,000, say even 20 default, 20 are not disclosing their income, they are not paying the tax, still there will be less loss for the government because now base is wide and more people are taxed. Understood? How would it help? Shreya? Understood? So this is how it works. Okay. Fair share, yes. Also less burden on certain percentage of the population. Government will also have more revenues to generate taxes from, right? This is the thing. So now I hope you have got to learn something about tax administration from today's editorial class. Now you know what the government should aim, right? Because the budget is about to come. Let's see what happens. Okay, we will discuss after the budget comes. Not people with very lesser income. Not people with very lesser income, but at least with, yes, not very higher income only. We need to include more people with less interest rate, less tax rates, okay? People having, say, middle income groups or upper middle, right? Can we quote example of tax evasion to escape from inheritance tax? Yes. Yes. Why government has been in the past gave so many tax relief to super rich people? Super rich people. See, government is not discriminatory against anyone. If you are rich, that is not a fault of you. Try to understand this. Being poor, being rich is not a fault. It is just a state of condition. Okay, it's just a matter of a particular state. So if you are poor, government tries to uplift you. If you are rich, that is not, for which you should be punished. Isn't it? You should not be punished for being rich. That's why sometimes super rich people get benefit also, but sometimes they get taxed additionally as well, which is known as your surcharge or surtax. Tax on tax. So super rich people are also contributing to the economy via surtax or surcharge, which is tax on their income tax. Yes, more tax slabs can be to adjust for more income groups. Okay, we can say that. What is canon of economy? Canon of economy is a concept which says that the cost which you incur for running your taxation department, running the entire tax administration, should be less than what you collect via taxation. Say, if you are incurring more cost for establishing a taxation department which is running the entire tax administration, then what you are earning out of taxes, then your tax is not efficient, then your administration is not efficient. This is what the canon of economy says. Your cost incurred for tax collection should be less than what you generate via tax revenue. This is what canon of economy is. Understood? I hope all of your questions are answered now. Any further questions? Shall I move ahead with the analysis? Yes? Okay. So let's move ahead with the next editorial. This is, taken from today's Business Standard. So right now these focus on trade, focus on tax, these kind of editorials are there. So I've picked up this one because they have clearly suggested certain measures which I want you to keep in your mind regarding India's trade policy. Although we have had discussions upon it, but it will add to your knowledge. Okay. So this is from Business Standard of 19 June, a blueprint for boosting exports. A blueprint for boosting exports. Now, what the author suggests? The author is saying the trade sector, we want to boost trade, we want to boost exports. We have to focus on India's trade. This is what the author highlights. Now, the author starts with this, that this sector has significant internal and external challenges which are underlying there, that needs to be addressed. Okay, that needs to be addressed. Now, here are 9 suggestions for the new government to boost trade and economic growth. So, we have already discussed what are the underlying challenges in India's growth, particularly via exports, right? We have had a particular editorial class in which I told you, I discussed with you what are the challenges for India's exports, what can be the solutions. So now moving on that same analysis, author gives certain suggestions which the new government should be, adhering to or looking forward to, these kind of steps, so as to boost India's exports, have a more favorable trade balance. What are these solutions? So first is given as, revive labor intensive exports, or say review labor intensive exports. So the author says exports in most labor intensive sectors. Which all sectors are your labor intensive? Okay, there are two terminologies, labor intensive and capital intensive. When we say labor intensive, it means you are employing more of labor as compared to capital in your industry. And when we are saying capital intensive, you are employing more capital or technology or machinery as compared to labor in your factories. But in a developing country like India, where there is huge population unemployed, where there is cheap labor available, you see labor intensive sectors are there. In some of the advanced economies, where technology is much cheaper than the labor because of lesser population, lesser unemployment, having more capital intensive technology is better. So which type of technique of production you should adopt depends on your nature of the economy. Understood? Just give me a second. Right? So this is the thing. And the author is saying that exports in most labor intensive sectors were lower in 23 as compared to 2015. We have seen lower labor intensive industry exports. Key product categories, which include your garment. So these are the sectors, you should remember, these are the sectors where India has labor intensive technology of production. Your garment sector, your textile sector, fabric, yarn, fiber, carpets, leather, footwear, diamonds and gold jewelry. Yes. So we have seen lesser exports from these sectors. Now that is a concern. Why? If you are exporting less from your labor intensive sectors, that means your labor is not able to generate adequate income level. Isn't it? You need to work upon it, because you have a huge labor population which is looking towards work, which is looking towards employment. You need to capitalize upon these opportunities of demographic dividend, right? So given the phase of demographic dividend, India cannot afford to neglect the labor force. That is the thing highlighted. These sectors generate more jobs per unit of investment compared to others. So these sectors are those which are generating more jobs per unit of investment as compared to other sectors. So the sectors which are generating more jobs should be given priority in exports, isn't it? Yes or no? Yes, because more jobs are there, more people will be able to benefit out of the exports. So that's what the author suggests. For India's trade policy, you need to revive labor intensive exports. That might not be the case with developed economies. For them, capital might be cheaper, but for India it is. Have you understood this concept? Right? Okay. Next, what the author suggests next: diversify service exports. Services exports are something which are helping India in reducing the current account deficits. So we need to work upon them. We need to diversify services exports. We need to diversify the products as well as the destinations which we are targeting. We should not depend on limited number of countries, because crisis in any country would translate into falling exports from our country. So we should diversify the avenues of our exports of services, as well as more products should be added into services exports rather than IT and software, apart from IT and software. 3/4 of India's services exports earning come from software and IT business services. That needs to be expanded. We need to include more products now. Okay. This is the thing. Next suggestion. So remember these suggestions. You can note down these points. Cut critical dependence on China. You need to reduce your dependence on China. You need to reduce your dependence on China. Having more dependence on China affects our trade deficit, affects the trade balance, right? So that is something which we already know. It accounts for an average of 30% of India's global imports in industrial production. So India has the most negative trade balance with China, if you remember, and the positive one is with the USA. So if we need to correct our current account deficit, we have to reduce our dependence on China. That would mean we need to produce more domestically and export more. Clear? Next, ensure that FTAs do not aggravate the inverted duty structure. Now, this is what you would learn something new today. What is inverted duty structure? Inverted duty structure in taxation, or say in taxing the goods and services imported. Inverted duty structure arises when import duty on the goods which you are importing is less than the raw material. So people tend to import more of the final good rather than importing the raw material. Okay, so the author says that we need to have such kind of free trade agreements which do not harm our economy, harm our domestic producers via inverted duty structure. What is it? Let's try to understand. An inverted duty structure occurs when import duties on finished goods are lower than the raw material. So how does it destroy your market? Suppose say there is a raw material. So what can be the raw material? Suppose there is certain type of fabric. Okay, suppose this is a raw material. Okay, there is a fabric, a type of fabric which is the raw material here, and there is a final cloth made out of this fabric. Now what happens is, suppose India is importing this fabric from a country. India is importing this fabric from a country. It has low taxes, low custom duty, that is on import duty. Okay, low custom duty. So it has low custom duty as compared to the custom duty on cloth. No, it has high custom duty. Sorry, it has high custom duty. High custom duty, not the lower one. So there is a correction. High custom duty as compared to the custom duty on cloth. So this is low and this is high. Custom duty on the raw material is high and custom duty on the cloth is low. Now tell me, the importers in India, say there are certain industries which are using this as raw material to produce clothes, will find it difficult to import this, isn't it? Even if they import, since their cost of production will rise, since they have to pay much on the on purchase of these raw materials, on import of these raw materials, their product, their cloth will be expensive in the market. And there are certain importers which are easily importing the finished good, the cloth only. So now the cloth made in India out of this fabric as raw material which has higher custom duty will be expensive as compared to the cloth which has been directly as a finished product directly imported into India. It will be cheaper. Which one is going to be sold out more in the market? The imported cloth or the domestically manufactured cloth? Tell me. Of course, the imported one. This is how this inverted duty structure corrupts your market. It destroys your market. What about your domestic producers? Their product will not be sold. So we need to focus upon this issue. This is something new which you should learn from today's class, right? Inverted duty structure. So this is what the author highlights, that we should look upon these things as well. We need to recorrect it in favor of Indian producers, in favor of domestic producers. Understood? Also, next suggestion, publish data on FTA performance. India has almost, signed free trade agreements with almost 14, there are 14 comprehensive FTAs, more than 14 countries, and 6 smaller scope preferential trade agreements. The government should publish the data to see whether the FTAs have met expectations or not. I would not take this discussion FTA to a deeper level, because in one of the editorial classes, we have had a detailed discussion about preferential trade agreement, about free trade agreement, right? Are they beneficial for India? Shall India reduce the trade tariffs, import tariffs, all these things we have discussed. So we need to look upon whether FTAs are working in our favor or not. That data should be published very transparently by the government, from the government of India's side. You know what is a free trade agreement, right? Where you have either free entry of your goods into the market of that country which you have signed the FTA with, or nominal rates are charged, nominal tax rates or zero tax rates, right? So that can help and that can harm as well. We have seen these things in one of the editorial classes. I have also discussed with you the RCEP. So I hope you remember all the concepts, right? Now, Next suggestion, counter effects of European climate regulation. Also we have discussed that Indian products need to meet the environmental standards now. We have to have sustainable production so as to meet the international standards, because now EU and other countries, EU as you know is allowing only those goods, or it is taxing, it is increasing the tariffs on the goods which are high on carbon intensity. Production of which goods, yes, CBAM. So EU is continuously tracking these kind of goods. So we have to have such technology of production which with further production enables us to reduce the carbon intensity. Otherwise, our products will not be able to enter the European Union market or other markets. We need to have standards of environmental standards as well. Comply with these standards as well if you want to be competitive in the global value chain. Next, enhance ease of doing business. Of course, more ease of doing business in your country would actually be there when there will be canon of ease. So you can connect it with the earlier editorial, with the first editorial which we have discussed. If investors are, have easy understanding of your tax laws, they will invest. So this is how you connect. Okay. Other export promotion measures. Automate custom processes to reduce delay, cost, invest in modern ports, efficient logistics and digital systems. So the author also says you need to automate it. You need to have technology in all these processes. You need to reduce the time and cost during the custom process, custom taxation, custom duties. You need to have more modern ports to be more efficient trader. You need to have lesser logistic cost, lesser transport cost, lesser freight cost, lesser freight timing and all these things. Right? Only then can your products will be competitive in the global value chain. Okay. Also, export high value goods, existing markets, help a small business boost their global presence, improve small firms access to finance. So all these suggestions are there. First, the author is saying export high value goods so that we can earn more. Next saying help small businesses to boost up. As you know, Make in India programs, continuous focus on the MSME sector, help them grow. Okay. Improve small firms access to finance, financial inclusion. Credit penetration should be increased. Everyone should have access to financial products, product line offered by the banking system. Next, e-commerce exports. You should expand your legs into e-commerce as well, because that is the future, right? Work to reduce non-tariff barriers in key markets. Now, barriers to entry for a good are not only tax based. There are non-tax barriers as well. What are they? They can be your international standards of quality which you are not able to meet. Okay? Like sanitary and phytosanitary measures of WTO. So Indian products sometimes fail meeting the quality standards at the international level. These are your sanitary and phytosanitary measures of WTO. So you need to work upon those things as well in order to prevent Indian goods from higher restrictions into global markets. Quality, yes. Quality, environmental standards, all these things. So non-tariff barriers should also be kept in mind. Apart from tariff barriers, these are certain suggestions which the author says needs to be done in order to boost exports yes, sanitary, phytosanitary measures and all other measures. So these were the suggestions given by author which he thinks are important for boosting India's exports, for improving India's trade position, having a favorable trade of balance, or say balance of trade. Now, and reducing the current account deficit. These were your editorials for today. 2 editorials we have discussed. I hope you have found them useful. You have got to learn something new out of them. And you can ask me if there is any doubt. Otherwise, we will end this session here. In preferential trade agreements, you give certain concessions to goods of those countries, right? In PTA, you give certain concessions, say reduced tariff rates and all these things. Okay. We give preference to the goods of that country in PTA. Okay. Any further questions? No? All right then. All right. Thank you so much. Thank you so much. I'll see you in the next session. Have a good day. Thank you.